So first of all, we will see the value added method. Value added is defined as a difference between the total value of output of a firm and the value of inputs brought from brought from other firms. GVA upon MP equals to value of output minus intermediate consumption sales plus change in stock minus intermediate consumption. So we can see like that. I will elaborate it. This method is used to measure the national income in the different phases of production in the circular flow. It shows the contribution value added contribution of each product producing unit in the production process. Every individual enterprises adds certain value of to the product, which is to purchase from some other firms as intermediate goods. When the value added by each and every individual firm is summed up, we get the value of the national income. So the value added method is also known as product method, inventory method, net output method, industrial original method, and the commodity service method. Actually, the maths concept of the value added method is that the value added refers to the addition of the value to the raw material intermediate goods. Maybe it will be some for someone it is finished good, but for you for it is a raw material. So intermediate goods by a firm by virtually of its productive activities. It is a contribution of an enterprises to the current flow of the goods and services. It is calculated as the difference between the value of output and the value of intermediate consumption. Here, that formula is given to you, value of output minus intermediate consumption. So this will help here. Suppose a baker needs flour to produce the bread in his bakery. So he purchased flour as an input worth rupees 500 from the miller, and then by the virtue of productive activities convert the flour into the bread, and it will be sold out in 500 700. So what happened? Flour is an input and its value is 500 rupees. Is termed the value of intermediate consumption, and the bread is the output and its value is 700 in term of value of output. So difference between the value of output and the intermediate consumption is termed as a value added method. It means that the baker had added the value of rupees 200 to the total flow of the final goods and services in the economy. So that will happen here. So this is the thing that it is used, most of the things it used value added method. But when we are using this method, we have to take some precautions also. Intermediate goods are not to be included in the national income, since such goods are already included in the value of the final goods. So that is why. Otherwise, it will be a lead to the double counting. Purchase and sales of the second-hand goods is not included, as they were included in the year in which they produced. So that is why we are not adding them again and again, and do not add the current flow of the goods and services also. That is why. So however, any commission or brokerage on the sales or purchase of goods will be included in the national income, as it is a productive services. So that is why production of service for the self-consumption are not included. For example, domestic services like services of the housewife, kitchen gardening, etc. are not included in the national income because it is difficult to measure them, and they will do the person for themselves only. Production of the goods for the self-consumption will be included. For example, in the national income, as they contribute to the current output, their value is be estimated and imputed as they are not sold in the market. Then change in stocks of goods will be included. Yet net increasing the stock of the inventories will be included in the national income as it is a part of the capital formation. So that is why we have to take these type of precautions when we are using the value added method. We have to avoid the final output method and for double counting. For avoiding the double counting, we have to use the final output method and value added method. It will be helpful for us. Now we will discuss about the income method. Calculation of the national income by the income method. The income method measures national income from the side of payment made to the primary factors of the production in the form of rent, wages, interest, and profit of their productive services in the accounting year. For example, land equals to rent, labor equals to wages. Like that, we will count. So, in the national income, again, I will explain you in the national income income method measure national income from the perspective of the factors income. Under this method, income received by all the residents of the country for their productive services during a year are added up to obtain the national income. According to this method, all the incomes that acquire to the factors of production by way of wages, profit, rent, interest, etc. are summed up to the obtain the national income. So now we will discuss the components of this method. So what are the components of comprehensions of employee and wages and salary in cash? So first of all, we will discuss comprehension of employee. COA comprehension of employees refers to amount paid to employee by employer for rendering the productive services. It includes all the payments and benefit which are employee received directly or indirectly from the employer. Compensation of the employees consists of three elements: wages and salary in cash. It includes all the monetary beneficials like wages, salaries, bonus, dearness allowances, commission, etc. Wages and salaries in kind. It includes all non-monetary benefits like a rent for free for home, free car, free medical, free education facilities, and imputed value of those benefits should be included in the national income. Third is employers contribution to the social security scheme. It includes the contribution made by the employer for the social security of the employee. So these things will be included. Next is rent and royalty. Rent is that part of national income which arises from the ownership of the land and building. Rental income includes both an actual rent as well as imputed rent. Imputed rent of the owner occupied house in the is calculated on the basis of the market rent value of the house. Interest. Interest refers to the amount received for lending the fund of the protection unit. It includes both actual interest as well as imputed interest of fund provided by the entrepreneur. Income includes interest on the loan taken for protection service only. Next is profit. Profit is the awarded to the entrepreneur for his contribution to the production of the goods and services. It is a residual income which an enterprise earns from the paying of all other factors of the production. So these are the main components of the income method.